So the next 4 or 5 years of my life was flipping, flip, hold, flip, hold. So I acquired some properties. And then through fortune builders, I met other flippers in South Jersey that I started financing because, quite frankly, I was getting a little tired of dealing with contractors. No offense to anyone out there who's a contractor, but I've had my share of not so great experiences. And as you know, the longer you hold property, the less money you make.
All right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and we have an exciting guest here, my original passive investor, a woman I met years ago, a good friend of mine, Andrea Tobias. How are we doing today, Andrea?
We're doing great, Aaron. Thank you for having me.
Absolutely. So good to see you here. And we have a really cool story, Andrea and I here. We actually met at a real estate networking event, one of those events where you go and you kind of scratch your head sometimes and you say, boy, everyone in here seems less experienced than me, but is this a good use of my time? And it turned out to be a good use of your time and good use of my time. And I was actually speaking. It was one of the first times I ever spoke in public. And my topic was fake it till you make it.
And you did a great job.
Oh, thank you so much. You know, speaking has never been my shortfall. I can speak till the cows come home, but I actually met my wife that night too. Did you know that?
No, I did not.
I met Dinah Brown that night and I took her out on a date, and then she said she wanted to be friends, and we didn't talk for 3 years. And then 3 years later, she came back around and we ended up getting married.
Very nice. I did not know that's how it went.
Yep. So that's a good reason to go to real estate networking events, right? You know, especially if you're single, go to real estate networking events. It's a great place to meet people. But so I digress. So Andrea, we met at this event. Fake it till you make it was the topic. And what brought you to that real estate networking event?
So my background is I took a course, Fortune Builders, where they taught how to flip houses. And Jonathan, who ran the networking group, I believe you were speaking because he could not make it that night and he asked you to speak for him.
That's right. Yep.
Yes. And so he, through Fortune Builders, ran the local real estate networking group, and I started going on a weekly basis and met you there, and actually a couple of other people that have been very good partners in the past 4 or 5 years. Or I guess we met like 5-6 years ago.
Mm-hmm. Wow. So you actually met additional partners you ended up doing more transactions with at that networking event as well.
Well, not necessarily that particular meeting, but that RIA group.
Yeah. No, that was a great RIA group. You know, I was a sponsor there for a number of years. We met additional investors that really helped me get off the ground, and I'm ever grateful to John as well. You know, it's so funny, someone can't make a speaking event, you get to step in. What an opportunity as a young realtor and investor myself there. But yeah, those things are a wealth of opportunity. We just had our first event back in the office, more of a seminar type of event a few days ago, and it was great. It was a packed house and very exciting. It is harder with the Corona and everything going on, but it was definitely a good event. It's fun to see people kind of getting back out there and participating again. But so let's go back here. So we met at the event almost 10 years ago, maybe not.
No, not that long.
No, when was that? 2012, I'd say.
Nah, was it? I would say 13, 14, maybe.
2013, okay.
I don't know. It's when I just became involved in real estate. So.
Okay. All right. So then, and that was good. So you had taken a course there, Fortune Builders. Now talk more about that. You felt that was a great experience for you, right?
It was a great experience. It taught how to not only flip houses, how to wholesale, which I never really did, but I did flip, and they had a formula, flip, flip, hold, flip, flip, hold. So I have numerous properties now throughout the United States. I have several in Florida, Pennsylvania, New Jersey. And I'm branching out into, well, that's another story, but I progressed. So through Fortune Builders, watching them, I also learned that it was also good to invest my money to other people. So you were my first, actually, one of my first people that I invested in.
Mhm.
And it became a little niche that I had in addition to the flipping.
Mhm.
So,
Yeah, yeah,
and
that was
yeah,
nice. Yeah. And I think you know, also learn when investing passively as well. You just see how another group of people are doing it and things like that. But yeah, that was a great opportunity for me as well as a young investor getting started. And I was able to go out there and show you that I was working hard and learning the ropes there. I don't think I made it a secret that I was getting started, you know, and learning. I think you saw the hustle and the ambition behind me, you know, not so much the experience, but certainly the ambition. But I wonder what drove you to invest in a young guy, you know, who's kind of getting started in real estate. If you can recall back then, what was it that you liked about him?
well, partly I didn't realize that you were as new as you think you are. I think you're way more experienced than I had, or at least in the business.
I was doing a
And
lot of deals as a realtor.
yeah,
Yeah.
and I remember sitting with you and you said, just not necessarily to me investing in you, but in general, because I had not really started yet. I was so focused on learning and going to webinars and going to RIA groups that I wasn't taking any action. And you just said, go do it, just do it. So within a few months, I financed you. I found property to flip. And in addition, which I don't think you know this, but there was another couple that I met in that RIA group, maybe not at that meeting. I don't know if you recall this, but HGTV came to one of the meetings and Jonathan had a little panel and we had to vote on who we would like to be the next contestant on a new show called My First Flip. Were you at that meeting?
I don't think I was at that one, but I remember.
So one couple did get picked and they did do a flip and I financed their flip. So we were on HGTV. It was called My First Flip, The Termite House.
The Termite House. I'll have to check that out. Maybe it's on YouTube or something.
That could be.
Yeah, that's cool. Now, how did that flip go for their first flip?
So that flip went very well. I held the mortgage, I financed it, but it went very well. It went well for me. It went well for the people who flipped it.
Good. That's exciting. That's really cool. And so you were actually on TV. Did they talk to you about your position there?
So I did, as you know, I have adverse feelings toward being on video of any kind. And so whenever I saw the camera, I dashed into another room.
Oh.
So I did not want to be on camera. And, you know, at the end of every flip, how they have an open house. So they want to control the people who are actually going through the property. So I was there as an interested home buyer.
Oh, very good. Very good.
So whenever the camera came my way, I ducked into a room.
Well, that's where me and you differ. I'd be right there in front and say, "Hey, look at me." No, that's cool. That's fun. Yeah, you know, I always I don't really like watching those shows because I do real estate all day long. So like a lot of times when I sit down and relax at the end of the day, the last thing I want to watch is a bunch of rookies flipping real estate. But I definitely enjoy some of the shows there. Sometimes they forget a lot of the costs involved in flipping houses when they give you the summary of what they made, and that always frustrates me. But
that is true.
But I digress. No, so that's exciting. And you know, I recall when I borrowed capital from you to get started, you also put yourself in a debt position, which I think is smart when you're getting started investing, but also borrowing capital. You know, debt position's a little more clear on exactly what you're going to earn. It doesn't really matter if the flip makes money or not. The operator still owes you the investment. And so sometimes you could argue, well, an equity position might get you a better return, but not necessarily, especially if the person's learning. And I believe I gave you a really nice interest rate as well. So when you're investing in newer operators, you can negotiate a higher interest rate because it's fair. You know, I now borrow capital for about half of that interest rate because I have a lot more experience. I'm a safer investment. So, but that's the idea of progression there. But that's a great way for investors to make a premium and for people like me as well to get started. But then, so that's great. But you went on to actually start to bridge the gap between being a limited partner, a passive investor, and actually being a GP yourself, a general partner and operator yourself. So, talk more about how you were able to kind of bridge that gap into being an operator.
Well, actually, the operator portion came first, so around the same time. after we had our transaction, I focused on flipping, and I flipped for the next 5 years. And at the same time, though, I also invested in one of your other properties, not in debt position, but as a true limited partner.
Yes.
So the next 4 or 5 years of my life was flipping, flip, hold. So I acquired some properties. And then through fortune builders, I met other flippers in South Jersey that I started financing because, quite frankly, I was getting a little tired of dealing with contractors. No offense to anyone out there who's a contractor, but I've had my share of not so great experiences. And as you know, the longer you hold property, the less money you make. So the key is buying the property at the right price, and then restoring it as soon as possible and selling it as soon as possible. So when your contractors walk out, or they're behind, or they get into accidents, or they whatever, it delays the completion of the job and then the sale of the job.
Oh yeah, 100%. I mean, one of the hardest parts of our job as operators is managing contractors, and contractors will also tell you, they're a tough bunch to deal with. It's really, I don't understand how some of the guys I've worked with are so good for so many years, and then one day they just never show up again. It just blows my mind. I've given contractors $250,000 over years, and then one day they just completely drop the ball and leave you high and dry. I rarely have a good long-term relationship with contractors. I think now we do, and we hold on to them so tightly. When people say, do you have a good contractor for this? We say, no, we don't. Because first of all, if we refer them to you and they don't do a good job, it's our fault. Secondly, if we refer them to you and you keep them busy, we lose them. So
Correct.
The last thing I'll do is give you my contractor, and they're priceless. I wouldn't sell for $1 million who we work with. It's incredibly valuable, and to work with the right people, because if you don't, you fail. There's no doubt about it. And that's what I found with contractors. It's really hit or miss. It is.
Right. Well, the key also is to establish relationships with numerous contractors, numerous money people, numerous wholesalers. I mean, this whole business is key on relationships. And it's a small community. So for the most part, everybody knows the players.
Sure. Yeah, and also, when you do wrong someone, word travels. But it seems there's no shortage of demand for contractors, so they always tend to find work. But you also want to take care of the good contractors. I've had people that are very good to us, and we're very good to them, and we pay their bills very quickly. There's no such thing as net 30 when it comes to a contractor bill. You need to get that payment in less than 30 days. It's not like a Home Depot credit card or something. So you definitely, we are good to them. But I also have come to find that you pay for what you get. I've hired cheap contractors and I've hired expensive ones. And both can let you down at times, but you're more likely to have them come back and finish the job right if you're hiring them for the right price.
Right, but I didn't mean just contractors. I just meant people in general in the industry.
Oh yeah. Brokers, bankers, attorneys. We've closed on properties with the wrong attorneys and realized that's a risk if you don't work with a commercial attorney on a commercial closing. Even if a residential attorney says, yeah, I can close that apartment building for you, if they don't do apartment buildings a lot, don't use them. We've learned that. Same with title companies. I've worked with title companies that are like one-man shops, and they're like kind of like, whatever, title company, like, yeah, just send me the money next week. I'll write down that you paid, and you're like, oh, you're gonna transfer a title. So definitely interesting people I've met in the business. Not just contractors. You could be running your own title company, you could be an attorney. Morality does not follow your title in business, that's for sure. Boy, oh boy. All right. So you were able to work with fortune builders. They helped you kind of get to the next level. You met more professional players, it sounds like, in that fortune builders community. Is that right?
At the networking group, I met people who were not necessarily fortune builder people.
Mhm.
So all my relationships, several other people were not fortune builders, but the group was run by Jonathan, who is very involved with fortune builders. So
Mhm. Okay, good, good. And then we went on to buy an apartment building together. That was exciting. We bought a 25 unit in South Jersey. You were an equity holder on that. So that was good. You know, that's a good case study there. You built your relationship with me. I proved myself to you. I paid you back on time plus the interest. I showed integrity. And then you went in as an equity partner, making, I think, a larger investment then on the apartment building. And with that, we had a lot of challenges. You know, I hired the wrong management company. One actually ended up stealing money from us. We had to take them to court and we won and we got a full payout. And so that, but a hell of an experience, and definitely forced us to start our own management company, which has been a great asset for us and our investors. So you really were with us along that way while we were learning. But the crazy thing is we went to plan B. We ended up selling the property 2.5 years later, and we were still able to hit our target on the profit. You know, that's how real estate is kind of forgiving. You know, it's,
mhm.
you can kind of screw up a little bit and make your mistakes, as we did on our first one with you there, and we still hit our targets. So it goes to show, if you're, you know, still trying the best you can, and if you hire the wrong management company, you can still recover generally on larger properties and larger assets, and that's good. And so now you continue to work as a GP and an LP with the property.
So so now when COVID hit, I stopped flipping totally. So now I hold, and I transitioned into multifamily
Hmm.
because the properties I hold now are single and two family.
Hmm. Okay.
So now I'm doing multifamily in the southeastern part of the United States, Texas and Tennessee.
Great, great. Okay. And how's that going for you?
It's going well.
Excellent.
We have one property in Texas, and we are closing on another property in February. It's 124 units. We're still looking for investors if anybody out there is interested.
Oh, that's very interesting.
So get in touch with you, and then you can get in touch with me, and then I'll reach out to them, since I don't know how.
Well, is there a website they could go to, or maybe an email address you want to put out? How could they get in touch with you?
I mean, they can send it to my email, Andrea@abodesacrossAmerica.com.
Okay, great. We'll put that in the show notes so that people can reach out to you there.
Oh, I can put it in the chat, right?
Yeah, yeah, exactly. And
I'll put it in the chat.
email address there. But it was very good to connect here, and it sounds like you were able to grow by going to these RIAs and connect with people. So I guess we can conclude that these RIAs are worth the $30 to get in. Would you say so?
Oh, for sure, for
Okay.
sure.
Plus, you get dinner. I think you're paying for dinner at that $30, right?
That's it.
That's it.
Oh,
That's it.
once I got a nice headshot too. Actually, I got this headshot
That looks good.
at the Jonathan had a professional
Right, right. That's great. That's
guy
great.
come in, and he did.
Yeah. Well, hopefully the RIAs get started again. I know the COVID was hard on them. You know, there's different restrictions. People don't show up as much, I've noticed as well. The turnouts used to be a lot greater. But hopefully that kind of sparks up again this year as the disease wears down, and we can get back to life here. But no, that's exciting. I love going to the RIAs. I love hosting them. They are a lot of work. I used to put on one every single month, and after a while, you're basically just an event prepper. You know, you're putting everything together. You filling the room is a lot of work. It actually costs the person to put on the event. The hotel would charge me like $29 a head, and I would charge 30 for the ticket. So you actually don't make any money from the event. You have to get sponsors to come in, and that's the only way you really make a profit. The money you're paying goes like right to the hotel, because the hotel charges you an arm and a leg for the food. So it definitely, in my experience, you know, it's a lot of work to put on the events. So definitely go out to them, attend your local RIAs. You know, Andrew's got a great story here, me as well. I met my wife there, so how good could that be, right?
And the sponsors are very helpful too. I mean, the accountant that I have was a sponsor at Jonathan's group,
Mhm.
and attorneys. I met some good attorneys through the RIA.
Yeah, I was a sponsor at the
Mhm.
event as well, and I think it was worth the money. I definitely met investors that way, and it definitely helped me get in front of the crowd, no doubt about it. But it helped me practice my public speaking too, the whole thing, just get your name
Mhm.
out there. So definitely worth the sponsorship money. And who knows, we might go back to that model again, where we have like a big event in a hotel and have the sponsors and everything. It was a lot of fun, but it was also a lot of work. And we just have to figure out how to get the right people in the room that are looking to invest passively in real estate on our scale that we do it. So yeah, no, it's very exciting. Well, we'll definitely put Andrea's information in the show notes so people can reach out to you for your new acquisitions you're doing. And of course, if you'd like to learn more of People's Capital Group, you can go to peoplescapitalgroup.com and check out our podcasts and our blogs there. We put up a new post every week, new podcast every week as well. And you can subscribe on YouTube also. But I think this was a great show here. It's really nice to chat with you again, Andrea. And thank you.
Good seeing you. It's
Absolutely.
been a while to see you.
I know. All right, excellent. We'll have to get lunch again someday soon and catch up. That would be great.
For sure.
All right, have a good day. Thank you.
Thanks, you too. Regards to Seth.
Oh, yes.